Think you need thousands to start investing? Think again. With just $100, you can take the first step toward building real wealth. In this video, we'll break down simple, smart ways to get started. No complicated jargon, no big risks. Whether you're saving for the future or just curious about the market, this is your guide to turning a small amount into something powerful. Let's dive into how to invest your first $100 wisely. Today, we will talk about how to start investing with just $100. So before we start, make sure to hit the like button and subscribe to my channel. 1. Breaking the myth of needing thousands to start. Many people falsely believe that investing is only for the wealthy. The truth is, you don't need thousands or even hundreds of dollars to begin. Starting with just $100 is absolutely possible, especially today with the rise of micro-investing apps, fractional shares, and low-fee platforms. The most important part isn't how much money you have. It's starting early and being consistent. Investing small amounts helps you build discipline, understand market movements, and learn risk management without high stakes. Most brokerages now let you open accounts with little to no minimum deposit. In fact, many apps are specifically designed for beginners and promote regular micro-investments. Whether you're a student, young professional, or someone just starting your financial journey, $100 can be your gateway to long-term wealth creation. 2. Set your financial foundation. Before putting your $100 into any investment, assess your financial situation. First, ensure that your basic expenses, like rent, food, and transportation, are covered. Then check if you have high-interest debt, like credit card balances. If so, consider paying some of that down before investing. Ideally, build a small emergency fund of at least $500, $1,000. That gives you breathing room in case of unexpected costs and prevents you from pulling out your investments prematurely. Once you're financially stable, define your investment goal. Are you investing to build long-term wealth, save for retirement, or learn how markets work? Your goal influences your risk tolerance and investment choice. If you're new to investing, your $100 is best used to explore and learn without the fear of major losses. Think of it as a low-risk educational expense that could yield both financial and knowledge returns. 3. Choosing the right investment platform. With just $100, choosing the right investment platform becomes crucial. Look for brokerages or apps with no minimum balance requirements, low or zero fees, and easy-to-use interfaces. Some popular beginner-friendly platforms include Robinhood, Fidelity, Charles Schwab, and One Finance, and mobile apps like Acorns or Stash. These platforms allow you to invest in fractional shares, meaning you don't need to buy an entire $3,000 share of Amazon. You can buy $5 worth instead. Consider platforms that offer educational content and customer support to guide your journey. Also, make sure the platform is insured and regulated by organizations like FINRA or SIPC. This protects your funds in the rare case the platform fails. Take advantage of demo accounts if offered, and compare platforms based on their fees, available investment types, and features like automatic rebalancing. Your platform is your gateway to investing. Choose wisely to ensure ease, security, and long-term support. 4. Understanding your investment options. Even with just $100, you have several viable investment options. One of the simplest is exchange-traded funds, ETFs. They're like baskets of stocks or bonds that offer diversification at a low cost. Many ETFs track the overall market, like the S&P 500, making them ideal for beginners. Individual stocks are another choice, but they require more research and come with higher risk. With fractional investing, you can buy a portion of high-value stocks. Robo-advisors, like Betterment or Wealthfront, automatically invest and manage your portfolio for a small fee, ideal for passive investors. High-yield savings accounts or certificates of deposit, CDs, are safer but offer lower returns. You can also explore REITs, real estate investment trusts, for exposure to property markets or cryptocurrency, though the latter is highly volatile. Match your choice to your risk tolerance and investment horizon. No matter what you choose, keep learning and reviewing your options regularly. 5. The power of dollar cost averaging. With only $100, timing the market isn't your priority. Consistency is. That's where dollar cost averaging (DCA) comes in. It means investing a fixed amount regularly, regardless of market conditions. This strategy helps you buy more shares when prices are low and fewer when prices are high, reducing the average cost per share over time. While $100 may be your starting point, you can continue adding $10, $25 weekly or monthly to grow your portfolio steadily. Many apps and brokerages support automatic contributions, making DCA easy and stress-free. This strategy removes the emotional guesswork of investing and reduces the risk of buying at a market peak. Over the long term, this habit builds wealth more reliably than trying to predict short-term market movements. 6. Diversify and reduce risk. Even with $100, diversification is possible and essential. Don't put all your money in a single stock or asset. Instead, consider ETFs or fractional shares of multiple companies across sectors, like tech, healthcare, and consumer goods. Diversifying spreads your risk. If one stock performs poorly, others may offset the loss. Many robo-advisors and apps automate diversification based on your risk profile. Some platforms also offer thematic investing, letting you invest in trends like green energy, artificial intelligence, or women-led businesses. Bonds or bond ETFs can add stability to your portfolio, while small allocations to REITs or crypto can introduce growth potential. Remember, diversification doesn't guarantee profits, but it minimizes the impact of bad investments. As your portfolio grows, aim to rebalance it periodically, shifting money between assets to maintain your target risk level. 7. Keep learning and avoid emotional investing. One of the most overlooked aspects of investing is mindset. With your first $100, focus on education, not just returns. Learn how markets function, study historical trends, and understand why asset prices move. Read investment books, watch YouTube channels like Graham Stephan or Andre Jick, and follow trusted finance blogs. Avoid making decisions based on emotions like fear or greed. When prices fall, inexperienced investors often panic sell, locking in losses. When markets soar, many overinvest or chase hype, like meme stocks, leading to poor outcomes. Stick to your strategy and stay the course. Use tools like watch lists or paper trading accounts to simulate decisions before putting in real money. Don't compare your journey with others on social media. Everyone's risk tolerance and goals are different. 8. Growing beyond the first $100. Once your initial $100 is invested, make a plan to build upon it. Set out regular deposits. Even $10 a week makes a difference. As your income increases, aim to allocate a percentage, like 10% of it toward investments. Look into tax-advantaged accounts like Roth IRAs or 400 and Onex if available. These provide additional benefits like tax-free growth or employer matching. Consider reinvesting dividends to increase your compound returns. Track your portfolio's performance, but avoid checking it too frequently. Long-term growth matters more than daily fluctuations. As your portfolio grows, you can expand into advanced strategies like sector rotation, dividend investing, or options trading. After deep research, celebrate small wins, your first $10 in gains, your first dividend, or hitting your savings goal. Remember, the most powerful investing strategy is consistency. Your first $100 is more than just money. It's the first step toward financial freedom. Keep learning, stay disciplined, and watch your wealth grow. But if you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.